Welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by Norsemont CEO Marc Levy. Marc, welcome to the Contrarian Capitalist.
Thank you for having us.
Pleasure to talk to you. Loads of things to talk about. I should do the disclaimer at the start that none of anything of what we say today is to be constituted as financial advice. And secondly, just to date stamp, because obviously there's a lot going on in the gold and silver markets at the moment. It is the 11th of November 2025. Mark, we will talk about Norsemont and we'll talk about everything that's going on with various projects and things such as that. But for those that might not know who you are, a little bit more about your background, please.
Sure. Been around the capital markets since 1998. Worked for two tech billionaires in the capital markets, originally in the tech sector, and shifted over in 2003 to the metals and mining sector and got involved and founded a large copper company called Norsemont. We call it Norsemont 1.0 to not confuse people. It was a Peruvian copper deposit that is in production now. We had sold it to Hudbay Minerals for 520 million. They invested about 2 billion. It's I think 30% or sorry, I think it's about two-thirds of their copper production right now. It's a large copper producer in Peru. Was also involved in Petaquilla Minerals. We tried to acquire that and I couldn't, so I actually became one of the largest shareholders of it and put my team on the board, and we ended up exiting that copper deposit to Inmet Mining, which has been, I guess, swallowed by First Quantum. So another copper project that's heading towards a production scenario, and also got involved in silver and a coal project that we sold as well. So we've sold over $1 billion of mining companies. I've been involved in other sectors as well. I'm a founder of I guess a unicorn that's very famous in North America and Canada in the medical cannabis sector, and got involved and used the branding of Norsemont and acquired a large gold and silver deposit in Northern Chile called Norsemont, and we call it Norsemont 2.0 for people that know me from before. But I've always been a big believer in the metals market, and especially nowadays with gold and silver is definitely top holdings for me and my family, and we like to invest alongside our investors as well, and tell the public about the opportunity of investing in the metals market as you do.
Oh, we were talking a lot off air before we started this about the joy of doing these recordings and podcasts and videos is to just share with people what we're doing, why we're doing it. And as we say, we're not here to give financial recommendations, but if people do take their own action as a result of this conversation to the benefit of themselves and their families, then that is the biggest win-win and compliment I think that we could get from doing such a thing like this.
Absolutely.
Mark, you were saying that you've been involved in mining since 2003, so 22 years, let's call it.
Yeah.
Obviously, there's been a lot of excitement within the last 3 or 4 years. So, I understand that and we'll come back to that. But let's rewind to when you first started. How have you seen sentiment fluctuate in the last 15 to 20 years since you started?
Interesting. I mean, obviously the metals market is very cyclical, and there's times where, there's tough times and there's no demand. And I think originally in the metals market, why I got involved in copper is as an example, I saw a use for the metal. Houses were being built and need, 400 pounds of copper for building a house. Copper wire for transmission, copper can be used in medical field. So I saw a big use for copper. And I think the metals market and the mining market was driven by consumption primarily. Prior to 2020, everything was about consumption. If you needed silver for certain devices, electronics, gold for jewelry, copper, uranium for energy, all that mining sector was driven a lot by actual consumption. And the Chinese were one of the biggest consumers back in 2008 through 2011 of copper because of infrastructure and manufacturing and whatnot. So they were buying a lot of the South American copper deposits, is a good example. Ross Beatty, I think, sold most of his companies to Chinese buyers who wanted the raw materials. Today, there's a paradigm shift where I think, yes, there's still obviously demand for, certain metals. But I think when you talk about precious metals, there's a different driver now, a little bit of fear, a little bit of protectionist, and I guess avoiding inflation on your capital. So there's a different use for, especially I would say gold and silver primarily are the more retail ones there. People are acquiring it to potentially protect their futures, protect their gains, diversify out of fear. I think there's a big fear factor out there. So that's a paradigm shift in the metals market where fear is driving a lot of demand for gold and silver, which could have been, I say could have been to be careful, artificially repressed or depressed because for every, you hear stories about every gold ounce that's manufactured, there's 6 ounces on paper shorted against it by the banks. So there's been some people, conspiracy theorists might say there's a manipulation of silver and gold for the last, several decades, and that's now starting to come unwound as well. So it's a very dynamic and interesting environment we're in today compared to 20 years ago, for sure.
I guess that the biggest example that I can think of the shifting trend, shifting narrative is when I think it was Goldman Sachs, correct me if I'm wrong, where they came out and rather than the 60/40 typical portfolio, they've said, well, it's actually 60/20/20 with that 20 to be allocated to gold. To me, that's an incredible paradigm shift. Is that something you would agree with, and do you have anything else to add to that?
Sure. When I first got involved in the metals market, well, I guess just recently I got involved in gold since 2019, and I was telling people and friends and family, making the suggestion that they should get 5-10% of their portfolio in gold and exposure to gold equities. Definitely agree today. Someone like Goldman Sachs, which is probably the most respected bankers out there, saying that 20% of your portfolio, that's probably a better number today compared to maybe 5 years ago. And I think that if there was the ability to survey, all of North America, 350 million people, uh, I guarantee you it's a handful, small percentage of them that have 20% gold portfolios. Maybe guys like yourself and myself that are more knowledgeable in the industry and more exposed and got involved earlier. But today, I talk to doctors and lawyers and accountants and tell them about diversifying into large cap gold stocks or gold, physical gold. I can guarantee you none of these guys have even 5% of their portfolios. So that's a very interesting point you brought up. And I think that could become a very big driver in the gold equities markets. Both the small, mid, and large cap markets could be impacted if you see a shift. And I'm helping friends and family to open their eyes to stocks like Nvidia.
Mhm.
You really think 5 billion is going to 10? I think you're better off diversifying into some of the larger gold producers that are making a lot of money and a lot of profits with this gold price. So it's going to be interesting when people do make that shift to 20% portfolios or even 10% portfolios.
And it's also fair to say that there's quite a lot of room to run. I mean, we're recording this again on the 11th of November. Gold's what, 4,100 US dollars, let's call it. Silver around 51. And I know that everyone will talk different on silver. We'll get to that in a second. At gold, you and I have probably seen, people say 5,000. I've had people on the podcast that have said, 10,000. I'm not asking you for a price target unless you want to give one. But the point is that
Sure.
this trend with everything that's going on, it has a lot of room to run and to run to the upside of that.
Yeah, I mean, you brought up my targets, and I guess I would say early this year, my target for gold was 3,500. So obviously I was wrong. And my target for next year was 4,000. Again, I'm wrong, but I was taking a more conservative approach. And I think circumstances have changed over the last 6 months, as we know. And obviously with the price at 4,100, you have, you know, I think Bank of America may be the most conservative, quoting 4,600 for Q2 2026. But Goldman Sachs, JP Morgan, every big bank is calling for 4,900, $5,000 gold by Q2 2026. I think 4,900 is the Goldman Sachs, since we talked about them, call for middle of 2026. So that's quite interesting. Um, my personal view is, I think I shared that earlier with you, is I think I'd love to see gold at 4,500 next year and 5,000 the year after. Um, and obviously there's a very big group of sophisticated, smart, successful gold guys, like an Eric Sprott is a good example, that are calling for 10,000 plus gold for the right reasons. I'm not a big believer in a long-term, $10,000 price. Could I see gold going parabolic when retail decides to shift to 20% portfolios and physical gold? I think we will get a short burst of several months or a quarter or 2 quarters where gold could go what we would call parabolic to seven, eight, $9,000. I think that's very possible, because unfortunately retail gets in too late, which is, I guess, part of why you're here and I'm here. We're trying to educate people, open their eyes, right? We're not trying to make them make decisions. We just want them to, read up and educate themselves. There's a lot of great banks out there that are putting out material that they can review. They can consult their financial advisors. And if your financial advisor, I go on the limb here. If your financial advisor is not advising you to have um, gold as part of your portfolio, you may want to open your eyes and talk to some new financial advisors that are a little bit more up to speed with what's going on in the world.
That's a sentiment I would agree with there, Mark, 100%. Moving swiftly on to silver, and again, it's just to get your thoughts about, where again the recent moves that we've seen in the last 6 or 7 months, where we are now, and then again, if you've got any idea or any targets in your head with where you think silver's likely to go moving forward.
Yeah, no, I like silver. I own physical silver. I own silver producers and some smaller cap silver stocks. So I'm a believer in silver. I may not be the same believer as some others out there, like Eric Sprott is a good example. I don't see us seeing $100 silver, in the short term here. Um, I think we can see silver easily going towards $60 next year. That's kind of my number, is $60. Silver is a really nice price point to be at, and a nice target. It's had a good run as well. A lot of good uses for silver as well. There's less silver mines going on online too, although you see, byproduct in my project, which is a gold silver project. We have millions of ounces of silver as well. So when we do produce gold, we'll be producing silver, and that happens very often with a lot of gold producers. So I do think silver has more legs, and I think silver is the most controversial of the manipulated markets. The bigger there is a lot of older school investors that I know and respect that have theories of master manipulations on keeping silver down and trying to get their silver. So silver's also been, one of those metals that's been really held back. And I think, financial markets have manipulated things a little bit to their advantages on gold and on silver. But definitely see lots of upside in silver too. Love silver.
Before we get into the weeds, so to speak, and really dive into the Norsemont Mining projects, and you don't have to comment on any other companies if you don't want to. But obviously, we're in Q3 reporting season, and a lot of the results, I think. people that are in the know, they've not really been caught by surprise when you look at, say, what the gold price is and what the AISC, all-in sustaining costs are. Some of the margins are absolutely staggering, and yeah, it's likely they're going to continue to increase as well. Again, you don't have to comment on particular companies if you don't want to, but has there been anything in particular that has caught your eye in any of the results, or is it this was expected and this is where we are?
I mean, there's lots of things that caught my eye. Newmont put out some good numbers, and they got spanked because they haven't maybe invested as much into their future and into exploration, so they don't have as much reserves as maybe the market wanted them to. But that being said, I mean, they'll probably address that through a lot of M&A that's starting to warm up and eventually will heat up onto acquiring mid cap or near term producers. Um, and they'll address it. But from my perspective, you hit the nail on the head. Is the all-in sustaining costs that people have are quite low. People are somewhere between 1,000 and 2,000, generally 12 to 1,500, and we've got 4,000, $4,100 gold. Very profitable. And if Goldman Sachs and all these smart bankers say we're going to go to 5,000 next year, if they're half right, these guys will be making more money than they've ever made before. And one of the things that's interesting about capital markets that I want to open the eyes of your viewers is when they report their financials, that's not what happened yesterday or last month or the last quarter. It's generally speaking 2 quarters ago. So when we get numbers out of any of these producers, those numbers, are when gold was maybe 3,000 or 3,500 and they're hitting these record profit margins. Think about what next quarter and the next quarter is going to look like at 4,000, $4,100 gold. And so I think any of these pullbacks on, and I do like Agnico Eagle quite a bit. It's one of my favorites. I do talk about it a lot because it's one of the most profitable gold companies out there. Kinross, Newmont, Barrick, they're all great companies making money. If you do your research, you can figure out who's better than the other. But I would say if you don't have any of them, you're worse off. You can pick the worst guy. If Barrick, I'm going to pick on Barrick. If Barrick was the worst gold producer, you're still going to do a lot better than I think your peers in the tech sector. You need to have exposure to the producers. And I think what they're going to be reporting over the next few quarters is going to be increase in profitability, increase in revenue. So that should bode well for their share price. And as that happens, and if we see a shift going from 0.5% gold equities or precious metals equities in people's portfolios to 20, the demand, I think, for stocks like Agnico Eagle or Barrick or Newmont, I think could go exponential because of just the demand, not just their profitability, right? And that may drive much better returns and share price because of there is only so many gold producers, And I use the analogy on NVIDIA. I always pick on NVIDIA. I'm not a shareholder of NVIDIA. Wish I was a few years ago, but I wasn't that smart. But NVIDIA at 5 trillion market cap. If I was to say, hey, if the shift away from NVIDIA happened and 10% or 20% of NVIDIA shareholders started selling, you got up to $1 trillion to come into the gold market. There isn't $1 trillion of gold companies for you to buy. So what will happen to companies like Agnico and Barrick? They're going to double and triple because there's just too much demand if there was a shift in sentiment towards them. And I think that's happening with smart money. I think it's when mainstream comes in and retail comes in. I think you're going to see bigger returns than any analyst is projecting for large cap. And of course, that trickles down to the mid cap guys that are near term producers or smaller cap guys like ourselves that are working towards production or delineating a resource. And that's when, M&A will start to heat up because these big companies have big valuations and they need to keep fueling growth. So it's going to become a really interesting dynamic over the next 24 to 36 months is what I think. We're going to have a lot of activity and a big shift in mentality and sentiment towards gold, silver, and production side of it.
Well, I think that's a fantastic point that you made as well. And we've not even touched on the supply and demand mechanics just in physical silver. We'll leave that for a different episode, but there's so much going on in favor. Mark, just before we get on to Norsemont, one other question that I did want to ask you. We saw that last week or a week or two ago that the US Geological Survey, the USGS, officially added both silver and copper, amongst other things, but silver and copper to its list of critical minerals. Do you think that's going to make a difference to sentiment moving forward, or again, are we too far down that path of, a positive trajectory, I should say, that it doesn't make much of a difference?
I mean, I think it's going to help. It does raise the awareness from that perspective. If the US is deeming silver and copper as a strategic metal and an important metal, it's going to raise the eyebrows and get a bit more attention. And obviously, the US itself is trying to position itself to be able to manufacture different types of products and needs those metals and minerals, across the board. So it's quite an interesting environment we're in, where countries are actually going into a protectionist type of actions to keep the metals within country and promote. I mean, the US is investing in mines now like crazy. You're hearing all kinds of money being thrown at projects to get into production to generate minerals and metals for, the United States manufacturing supply. So, and I think every country is starting to wake that up. Canada's doing that as well. Middle East has been doing this for a little while. They've been trying to promote investment locally. So there's a big drive, and I guess it boils down to also, we didn't touch on this, but obviously all the central banks of smart countries, I'm going to say, because I live in a not so smart country. They're all buying gold. All the central banks of all the main countries are buying gold. I think there's just a few countries, including Canada, sadly, that sold off all their gold and don't have any, which I think is going to be very painful for Canadian government and Canadian people. But yeah, the big boys are jumping into gold. The price of gold is moving. Governments are trying to protect themselves and foster a good environment for exploration and development in their own countries, and especially, like you said, the United States now jumping on that bandwagon. So it's a very interesting environment we're in.
As you mentioned there, you have Canada, we have Brown's Bottom in the UK between 1999 and 2002, where goodbye gold at $200 to $350 an ounce. So hindsight's a wonderful
I
thing,
didn't
I
want to
know,
make fun.
but
I didn't want to make fun of the UK, but I think it's the UK, Canada, and Australia that have no gold. That sold all their gold. I
I
can't
believe
remember if it's
so.
Australia or not. I should know it. I think so. Yeah, it's sad. We're the countries that should have gold. We should be ahead of the curve. I mean, Canada is a resource-based country, produces a lot of gold, and how we're in that position is beyond me.
Yeah, it's crazy times to say the least. So I think we'll touch on that in a different episode as well, Mark.
Yeah,
Let's focus now on Norsemont Mining. And I possibly should have said
sure.
this at the introduction at the start, but Norsemont Mining, Canadian resource development company focused on advancing and developing the past producing Choquelimpie gold, silver, and copper project in northern Chile. So I know that you've been away doing some, metallurgy work, drilling, and so forth. So, how is the project going down there in Chile?
It's going very well. The political environment, first of all, in Chile is very favorable. Their GDP is dependent on mining. They came out in the summer in July saying 70% reduction in timelines for permitting. So very positive. There's a shift happening in the, new president coming in that's more pro mining, which, is a bonus because they're already, doing really good job on the mining sector. Our project was the third largest gold producer in the late 80s, early 90s. And we acquired that from COPEC, which is a very large conglomerate in Chile. And, we've been advancing it and drilling out the deposit. We put out a resource. We have initially 2.74 million ounces, and we are targeting a 7.5 to 9 million ounce global resource. We are working on metallurgy to better understand the how easily the metals liberate in a production scenario. So we're going down two paths right now. We have the production path where we're focused on metallurgy, engineering, and advance and permitting to get the project into a production scenario and towards cash flow. And in our deck, we're targeting 2027 as a production time frame, which is very short term in mining. A lot of times, short term production is usually 5, 3, 2 years away, and we're less than 2 years away. So, we're in a really favorable situation, and we're advancing that. We have an existing. One of the beautiful things that we have with our project is we've inherited full infrastructure. So we have a 3,000 ton a day mill. We have an ADR effluent plant. We've got backup generators. We've got power, year-round roads. We've got a camp we had to refurbish. So we did some engineering work as well on the plant because we want to bring the 3,000 ton a day plant back into production ready. And so we are working on that as well. We've inherited about 175 million worth of infrastructure in here. So our CapEx to go into production is very, very low, and time frame is quick because we have all that infrastructure. It costs a lot of money to bring power. We've got water, we've got roads, all that fun stuff. So we're going down a path on the production side, which is maybe sometimes could be the boring part of the story. And, things are good on the metallurgical side, and we want to better understand how easily each of the different types of resource liberate with leaching and other metallurgical testing to move towards that production situation. We will have, our PEA for production for next year, and we've got a good existing resource to start the production cycle. We also are, embarking on our drill program as we speak. Actually, we're in drilling mode, and we're looking to test the resource at depth. So we have one of the unique things is the system itself is called a high sulfidation epithermal system. And that might be geological gobbledygook, but typically these mean that there's a lot of gold and silver at the surface. And typically it's within the first 200 to 300 meters where you have this mineralization occurring. And this project has only been drilled down to like 70 meters. So there's still down to 300 meters. There's 3-4 times the depth to drill down to find more gold and silver. And that's why we target about 7.5 million ounces is drilling this down to depth, which we're drilling like 300-meter holes, up to 300-meter holes into the project. And we've done holes previously at 300 meters encountering mineralization. So we've proven the theory that the gold and silver does exist at depth and along strike. It's a very large 8-kilometer strike. So we also have the exciting part for retail investors and investors that we are drilling in very high grade locations at depth, so we can add larger volume of mineralization, so increase the resource, as well as higher grades to get the overall grade up as well. One thing very unique about our project that was pointed out to me by another gentleman named Don Durrett, he does a good analysis of a lot of the more advanced stage mining projects, gold projects out there. And he pointed something out to us that we hadn't realized last year. Most projects out there that are, world-class projects have one existing world-class drill hole or two, and maybe even three. There's a half dozen projects listed in Canada like that. Our project has over half a dozen of those
Wow.
world-class drill holes, and they're not all in one area. They're in the northern part, the central part, and the southern part. So in 3 different areas, we've got some pretty amazing mineralization and at significant intervals. Like we have We've got 35 meters of 32.2 grams of gold, 8 grams of silver in the northern part, which is a 1,000 gram meter hole. It's a world-class hole. And it ends in mineralization. So we want to drill that down to 300 meters. If we were to pull 100 meters of that potentially, or 200 meters of that, that would be probably one of the largest drill holes pulled out of South America in any time. That would be not world class, that would be beyond. That would be a blockbuster hole that, the world hasn't seen yet. And so we have another area that's similar that has 24 meters of 35.5 grams of gold and about 150 grams of silver that we want to do the same thing. So we've got these areas that we want to drill out that are, high grade, large intervals from surface. So that part is more exciting to investors to see us that we're drilling. We've got one drill rig, I think, arriving this week and another one next week. So we'll be drilling with 2 drill rigs up to 20 holes and diamond holes. So that material that we also will be drilling will also be running metallurgy, advanced metallurgy on it to do cyanide soluble testing to test what part of that material is leachable. Because we've got a unique situation where we've got something we call oxides, which is mainly gold, silver at surface, and those are amenable to leaching, which is equivalent of, hey, build a swimming pool, throw all the rocks in there, put in some acid, and out drains out the gold. Is my kind of simple way of putting it for the average investor. And so we have an infrastructure there to put into production. We have over 500,000 ounces of that type of material. So if you look at today's price at $4,000 of gold, we got $2 billion of material. Typical leaching operations are in the vicinity of $300 to $500 an ounce for production. So you got a really, like you talked about earlier, huge margin, $3,500 profit at $4,000 gold. And so we've got, $1.5 billion profit just in the first 500,000 ounces of our oxides. And we've got other areas that we want to drill out. We think we can get to 1.5 million ounces of oxide, which is the lower cost production and faster to liberate at a very low cost basis with, the CapEx. We have all the plant and everything in place. We just have to do some polishing and upgrading. So not a crazy CapEx. We don't need a big CapEx like most facilities. Most guys would have to go out and spend $100 million where, ours may be 10, 20 million or something like that. We're waiting for that number. I don't know the number yet. So it's a very minor CapEx to get into a cash flow situation, which would make us sustainable and never have to raise money again from the capital markets. And obviously going into a market where if you believe gold's going to 4,500 or 5,000 next year, being in production while gold's at 5 and 6,000 is pretty exciting. So it's a very unique opportunity and situation.
Yes, certainly not a bad place to be, Mark. I just want to circle back around to Don Direct. I know that most people that are going to watch this, Don's been on the show a couple of times, very highly
Okay.
respected. So the fact that he has brought that to your attention, I think puts yourself and Norsemont in good stead. I'm also aware that not everyone's going to be as au fait with mining. There's some people are going to be really aware of the terminology. Some people might not be as aware. I know that to attack things from a layman's point of view, a couple of key words that spring to my mind that are important. Number one, trust. Number two is people putting their own cash where their mouth is. And thirdly is management. So let's attack these in reverse. If you can, obviously you're the CEO, as we said earlier, but tell us a bit more about your management team, the staff on board, and what expertise they bring to both Norsemont and the mining industry.
Sure. One of the key guys on our team, on our board, is Michael Thiel, who's based out of Santiago, Chile. He's a mining engineer. There's a mine called Esperanza that he drilled the first drill hole and 6 years later put it into production for 2.7 billion. So it's a large cap mine. And for those of you that aren't aware, putting a mine in production in 6 years is unheard of. That's like a world record in Chile. That's on time, ahead of budget. Typically, the cycle takes a lot longer. than that, he also helped Anglo owns a very large mine called Las Bronces, which he helped turn around as well. So he's a mining engineer. He's got a team. He's on our board. He's overseeing any of the engineering side of the project and permitting side. Um, Guiding us down the road to production. We also have David Lang as an advisor, who is a mining engineer, who's a famous mining engineer that was the COO of Equinox and COO of True Gold and Quintana, all multi-billion-dollar successes, and as well Endeavor, which was a $35 billion success. He actually put Choquelimpie into production for Shell, the oil and gas company originally owned Choquelimpie back in the 80s and early 90s. So when we acquired it, I approached him saying, "Hey, I acquired your baby, one of the first big mines you put in production. Can you come help us out?" So we've got him on our team, and we've got a really good geological team as well that has a familiarity with mining, headed up by our chief geologist, David Flint, who used to run Freeport McMoran on the exploration side. He's also one of the guys that discovered Grasberg, which is probably one of the largest mines in the world. He was the team that initially drilled it actually and made the discovery. So really smart geologist. He's been involved with production plays as well. He helped build out Highcroft. He grew their resource by 10 million ounces of gold, 450 million ounces of silver. He's integral part of our team. We have also one of the gentlemen on our team on the ground, who we've got a whole team in Chile on the ground that's been involved with the project for a number of years. So they're very familiar, which is nice to have continuity from the past. Roman, who's a 50-year veteran, ex-Rio Tinto guy who heads up our team on the ground there from a geological standpoint. We also have recently brought on uh, Paul Matizik is an advisor to the company who is also an investor recently into the company. Quinton Henning, Rob McEwen, and Crestcat, Larry Lepard, who does work with Don Durat. And so we've got all of them as well, that we run anything that we do strategically from the mining or geological side by them as well. And so we do get input from them. Paul Matizik's son, who's a geologist, is also coming on board to oversee business development and corporate development for us. And Nicholas Matizik, he's also a PGO. He's a professional geologist. So we've got a really good team of, in-house geologists. We've got a whole advisory board. There's another engineer that's involved with our company. On our team, we've got a lot of capital markets expertise as well. And I think when you look at the successes, Art Freeze, who's a famous geologist that was the primary geologist at Goldcorp and chief geologist at Wheaton River, I met him 20 plus, I guess 2004, I met him 21 years ago. He's had a lot of success in South America. He's on our team as well. So we've got a really robust technical team, and we have a great team on the ground with local people that are very loyal to this project and want to see this become a big success because it impacts their town and their area. Because we are in a very unique area where there's only two other mines in production, and we would be probably one of the larger gold producers in the area. So we've got a good relationship with the local community and support. We hire within the local community too, which is really nice.
I must admit, country and community was the number four that I should have said that I hadn't said that you've just brought up. So thank you for that, because we're
Yeah,
also,
that's key.
yeah, as you've just mentioned, working within the local community there, strong ties, but also because of the longevity of the mine, and you're within northern Chile. Again, they're looking at mining quite favorably as well. So you've also got that working in your favor.
Yeah, no, it's a very good situation for us on that point.
But one of the other key things that you mentioned again before we started recording, I think is incredibly important, is that you also have your, dare I say, fiat currency where your mouth is as well. So if you don't mind sharing, you're actually
Sure.
heavily invested in this as well, if you don't mind sharing that.
Yeah, so our entire team, my CFO Kuwan, my lead director Chuck Ross, every person on our technical advisory board, technical team has been an investor in the company at different levels. Myself and my family, we are by far the largest investors in the company. We have invested about $9.3 million into financings and the capital markets over the years. And we are the largest shareholders as a group. I do have a strategic shareholder in Europe that owns close to 20% with his partners. And we've got a number of strategics like Victor Cantori, who runs Amex Mining, is a very big supporter of ours, big shareholder. I talked to you about Rob McEwen, the billionaire investor. Paul Matizik obviously is a force to reckon with and a big, one of the more successful guys I know in the markets. Quinton Henning, who's world-renowned geologist, Dr. Quinton Henning of Crescat. Crescat's involved. Larry Lepard is involved. So we used to, we have about 68 to 70% of the company held amongst 20 good groups of people, like 20 people. We have a big supportive group out of Arizona and out of Quebec that own about 10 million shares with them and their friends, which is a big position. And they're all big believers in this being, a 10, 20 bagger story. Just as Don Durrett, you mentioned, he figured us out pretty early on. And I think when we were about 30 cents, he's like, I found a 30 bagger. And I'm like, hey, tell me which one it is. And then he tells me Norsemont. I was a little disappointed. Yeah, it's my company, but I'm thinking, which one are you going to point me to that I can invest in that I haven't invested in? And so Don's been a big supporter of ours as well, getting the word out, getting the story out there. One thing about us, we're very aligned with our shareholders. All I care about is building out the company and creating shareholder value and stakeholder value. We don't chase salaries and paychecks. We're more, all of us are financially motivated by increasing the value of the company, which then, provides better share price. And we are big believers that our share price is highly undervalued. I mean, if you look at comparables today, a lot of analysts and bankers said, Mark, I don't even understand why you're not at $3 today with what you have. Never mind about what you're doing tomorrow and how you're going to grow things. Just on a gold per ounce comparative basis or a corporate care, yeah, comparative. One of the other gold producers, a really good company called Rio 2 in Chile, is sitting north of $1 billion market cap. They're ahead of us, and they're a lower grade producer, but they've got the money on hand to build out and go into production. So we're not there yet, but we're working towards it. Our grades are a lot higher, as an example, and I think our resource will be a lot larger as well after we finish off our exploration work over the next 12 months. And so there's a lot of comparisons to show that there is a pathway to build this out to become $1 billion or $2 billion company. And I've sold $500 million companies before, and people know me for selling, but this is too enticing to put into production because it's such a low capex. I've sold a lot of copper companies because you need to raise $2 billion to put a mine in production. I can't raise $2 billion. I've never tried, so I shouldn't say I can't. But I know
Mhm.
Robert Freeland's doing that, and he's a biggest boy on the block, and even he had some challenges, but he's doing it. To put this into production, it's such a small capex that I could write the check myself. Any banker could. So I want to take this into a production scenario, which would get us a much better valuation for our shareholders, get us into cash flow situation, which, in the environment that we're in today, if the bankers are right and gold's 5,000 next year and higher the year after, we'll be highly profitable and making hundreds and hundreds of millions of dollars. So, that's pretty exciting. And again, we put our money where our mouth is. So we're very aligned. I think we're the only, I don't think there's a sub $100 million company out there where, or many out there where the CEO and his family have almost eight figures in the deal. That's completely rare. I'd love to hear more. If you found one, let me know because I would love to be an investor, to be honest with you.
Oh, I'll bear you in mind, of course, Mark. When if I find a comparable there. I just want to recap because you've covered a lot of ground there. And again, I appreciate that there's people listening to this that are going to be well attuned to mining, and there's going to be people that know gold and silver but might not know anything about mining. So, if you allow me to just recap, just so I've got this clear. So we have there is a potential, given every circumstance that you've gone through, there is a potential that Norsemont moving forward could be anywhere between possibly a 10-20 bagger because of various factors. You have an excellent and experienced team on board, as well as recent 6 million, as you say, that's been raised from, again, some very prominent names within the industry. We've got Don Durrett, who has mentioned that the world-class drill holes that you have are, above and beyond most, if not all, other mining companies out there. You're in a friendly mining jurisdiction in terms of country. You're also within the community within that country in a very friendly place because you have integrated and continue to integrate yourselves within that community. So we've got obviously quality people on board, with regards to investors or people that know the industry, and obviously geologists and so forth as well. And you have also put a lot of your cash where your mouth is as well. Is there anything there that I've missed out, or is there anything as well that you would like to add to that?
Yeah, no, that's a good summary. We are in drilling mode, which is probably the most exciting mode. So we'll be providing a lot of good drilling news flow over the course of the next quarter or so, which generally, they say the drill bit tells the story. And we are drilling in very low risk, high grade targets. So I think we'll get some favorable results out into the market. And the way the gold market is today, hopefully that should stay or be even better. I think we'll see some really get noticed. Our job right now, we haven't really told the story well. We haven't gotten analyst coverage yet. I think once we release some drill results, I think that's going to change dramatically. I think there's going to be a lot of people beating down my door to get our story out there and hopefully see our valuations actually go to a place that make better sense. And I think that's what drove decisions by people like Quinton Henning and Paul Matizik and Rob McEwen. They looked at this and said, Mark, this doesn't make any sense at this price. So we want to come in and take big positions because we believe this is worth a hell of a lot more. And there's a lot of meat on the bones here for you to demonstrate to the market. So, we're very thankful for all of our strategic investors believing in us and giving us the capital to advance the company. And I think, we want to expose ourselves to the retail market, to your followers, to say, hey, jump on board and come support us. If there's any questions, write us, contact us. We're very responsive. And definitely it's going to be a very fun time with a lot of good news flow from metallurgy, engineering, and more importantly, drilling, which is what everybody wants to see.
Well, I'd like to say a massive thank you for your time, Mark. I'll hold my hands up. You're the first ever mining company that's appeared on the Contrarian Capitalist podcast. So it's been an honor and a pleasure to have yourself on board to talk more about Norsemont. I should add, and I'll put this in the post or in the YouTube description as well, that for those that are interested in having a look at the share price and other information, first of all, norsemont.com. That's NORSEMONT.com. And for those that want to track prices and so forth, on the OTC, it is the NRRSF, and on the CSE, it is NOM. Mark, it's been, as I said, an absolute pleasure to have you here. I hope that people do reach out and connect with you, and look forward to catching up in 2026.
Absolutely, and appreciate you having me on your show, and definitely honored to be the first mining company out there, and hopefully, this bodes well for both of us, and hopefully you'll find other excellent companies to feature in the future here to expose to your followers.